Hi there, fools. I'm Deidre Woolard, an editor over at Millionacres, the Fools Real Estate Investing website. I'm excited to talk to a very experienced real estate investor today who's a member of the Wealth Noir network. Arthur P. Johnson Jr. is the Chief Strategy Officer at Pure Storage. He's also got a family of five. And in addition to that, he's got a real estate portfolio of over 50 units across 4 states. Welcome.
Thank you for having me. I'm excited to talk to you and talk about real estate investing.
Well, let's get into your journey. How did you get started in real estate, and what has it brought you?
So it's funny. So I can remember back when I was 16 years old, I was delivering pizza for a pizzeria. And the owner of the pizzeria was this really good-looking guy. He had a fancy car, beautiful girlfriend. And I got to talking to him one night to find out how did he, how was he able to afford the car and the pizzeria? And he said, I make money doing this. And that was my first lesson in passive income. And so he owned several apartment buildings in Los Angeles and the pizzeria, and he made his money doing that. So that planted a seed in my head, 16 years old, that real estate was a path to wealth. And so fast forward 15 years later, I was working at a big tech company and I wasn't feeling very valued and I felt stuck. And I thought the way to get out of this is to get to financial independence, and the path to get there was investing in real estate. So back in 2003, I bought my first single family home in Albuquerque, New Mexico. And now I have 53 units across 4 states.
That's amazing. So I know you've got a busy life, you've got a full-time job, and you've got all of these units across multiple states. How do you structure that so that you can get everything you need to get done? Because we all know that passive real estate investing isn't really quite so passive.
That's right. So that's a great question. So I do have a very busy life with 3 teenage girls, full-time job, married for 21 years. And so there's no silver bullet. And I think the thing that helped me was that I selected the kind of real estate that would suit my lifestyle. So you can get into wholesaling, you can get into fix and flipping, but that's like another job. And so for me, buying and holding was the best path for me in real estate to pursue that. And also, once I found an attractive market and had a great team, I wanted to get as much real estate as I could in that market. A lot of investors I see, they jump from market to market, but that's hard because it takes time to get a market settled. And so that was also important to me as well. I did wake up before everybody else. I'm an early riser. And I also put systems in place to make sure I can be organized by having software and spreadsheets to help me with my properties. And I got to tell you, like you said, Deidre, the first couple of years owning a property in a new market, it's a lot of work. But after you stabilize it, it becomes very, very passive.
Well, I think it's interesting, the idea of buying and holding. It's similar to stocks in that buying and holding is really where you get your benefit. What led you to Albuquerque as your first market?
I get that question a lot. So, being the quantitative person I am, I did a spreadsheet of all the largest metros across the United States. And I looked at population growth, income growth, rent growth, migration patterns, and try to identify the key factors for a good market. Then I wanted to make sure I wanted to have my first location be close. I know I could invest in California, but I didn't want to invest too far from California. So I said, I want to be able to get there in a day and back on a flight. And also wanted to have a state that had great weather and good sunshine. And that led me to like Texas, Colorado, and New Mexico. I flew out to all 3 of those areas, checked out the areas, talked to realtors, and I landed on Albuquerque because it had the highest per capita PhDs, had a good stable economy, and a very affordable housing. And so I picked that as my first market.
Interesting. So how did you get that first step going? So you knew you wanted to invest, you found a house. How did you deal with financing, budgeting, all of that? And what sort of steps did you take as you made that first leap?
Yeah, I think that it takes a big leap of faith to buy a property in another state and to have somebody else manage it for you. And so for me, I'm all about relationships. And so I wanted to make sure I went to the state, met the team, built that relationship, and that started to give us trust going back and forth. I think that also dealing with a investor-focused realtor helped as well. Most of her clients were out-of-state investors, and so she knew how to deal with us. And so she would take pictures of properties, send it to us, send us videos. We'd have an inspector inspect it from top to bottom. So that gave us some comfort that we had a good kind of eyes and ears on the ground to help us out. And for me, it just also, I was almost like getting paralyzed with analysis. And so I said, at some point, I have to make a decision and take a leap of faith. But I started small. And I said to myself, if I'm going to make a mistake, that's okay. It's my education and just keep on going. And so that's what got me over the hump.
I love that you mentioned that because we talk a lot about analysis paralysis with real estate investing because we've seen so many people who read all the books. Maybe
Yeah.
they go to a couple of investing groups, but then they can't get over that hurdle. What was financing like for you the first time, and how did you do it? Do you have any advice for people trying to finance a real estate investment?
If financing is a very, very important part of your investing portfolio. And so for me, my advice would be have all your ducks in a row. Make sure you have a good debt to income ratio, 28 to 35%. Your credit score is clean or as clean as it can be. Make sure you have the down payment. Make sure you have any potential reserves for any capital expenses or vacancy. And so once you kind of have that, then you start to build a relationship with a good mortgage broker or with a bank that you have a relationship with. But remember, there are some shady mortgage brokers out there. So make sure you get a recommendation from a friend or somebody you trust. And my advice is on the financing side, get as much money as you can for as long as you can. You can always pay it back sooner. And so if you get a short-term loan, you're constrained to that. If you get a longer-term loan, you can pay it back over the long term, or you can kind of pay ahead of time. So get as much money as you can for as long as you can.
How long did you hold that first property before you decided to get a new one?
I held it for 1 year. And so my theory was if I can look at the property projections versus the actuals after 1 year and things are within reason, then I think that I want to invest more in that market. So I waited 1 year before I got my second property, and then 6 months after that for my third property. And I bought a total of 5 properties in that market before I went on to a new market.
What was the process like when you were trying to find a new market? Were you trying to replicate the same experience? Did you want to diversify into a different type of market?
That's a great question because I tried to find a market that had a hybrid of cash flow and appreciation. And I realized it's hard to find both in the same market. And so my next market was focused specifically on cash flow. And so I went to the Midwest because they had the lowest asset prices there. And they had a good kind of blue collar tenant base in those areas. And so I went there for cash flow and I went to Texas for appreciation. And so one of my first biggest lessons learned was it's hard to find both in one market. So to diversify your portfolio, go to two different markets for two different things.
Oh, that's really interesting. What about single family versus multifamily?
So I think to each his own, but I'm a big proponent of single family because I want to attract the kind of tenant that's going to be there for a long time. I want to have the husband, the wife, 2.5 kids, the dog, the white picket fence, and a good school and a good neighborhood. They're going to stay there for 3 or 4 years. If you have a 1 bedroom, 1 bath, unit, you're going to attract some of that single or a couple, and they move more often. And so I'd rather attract a couple or a family that's going to be there for 3 or 4 years in a 3 bedroom, 2 bath home with a nice yard. And so that's what I like, why I prefer single family homes. The downside of that, though, is that on the multifamilies, you can get more appreciation and more cash flow on some multifamilies. And so there's a trade-off to be made. But I think that the single family home for me over the long run is a better investment.
So as you leveled up owning properties across multiple states, what tools and what kind of team members did you need to build your empire?
Yeah, so I got lucky. So I stumbled upon a tool called Stessa. That's STESSA.com. It's like Mint or Quicken for property owners. It allows you to take all the information from all across all states and property managers and put it into a report. So you can look at income, expenses, you can look at cash on cash returns. That's my kind of my dashboard for my properties. I also built a spreadsheet and Google Sheets to help me evaluate investments pretty quickly. And then again, the anchor of my team was an investor-focused realtor, having a very, very good and vetted property manager, having a contractor, and then having that good banking relationship. That's the core of my team in each of these areas. And so I worked really hard to kind of build up that team. And I've been very fortunate that the team has been great so far for me.
As you're building up that teams, are you looking for referrals from other investors? Are you getting referral from one realtor to another realtor in another market? How did you go about structuring that team?
So I went about by getting referrals. And so I went to a lot of like meetups and mentor groups. So I talked to my mentors, talked to meetup groups. I looked at forums online as well. And one thing I also did to build this team was I tried to use what I learned in my corporate life and use that on my property. So I try to manage it like they were my partners and employees. And so I give bonuses to my contractors at the end of the year. When it comes to my tenants, I treat them like my customers. I give them a basket when they move into one of my units. I send them a Christmas card and a birthday card every single year. And so I try to make sure that I know that they are my customer, and I need to make sure they're pleased and happy. And that's a lesson I learned from my corporate life I'm applying to my real estate business.
I really love that. I think that's so important. And that brings me to a question that I wanted to ask you because I feel strongly that smaller landlords, the mom and pop landlords, really are important to the communities they own in. It sounds like you feel like that's really important too.
Yes, I think that you're seeing a trend where there's a lot of institutions like Blackstone and BlackRock that are owning these kind of rental communities across the Sun Belt states. And I think that's fine. And they're doing it to make a return on their investment, but they're treating the tenants like they're a number. And when you live in one of my properties, you know that you can be treated in a special and unique way, and you have a great place to live. And another thing that I'm doing is that whenever somebody moves into my units, I very rarely raise the rent. And I think it's important for somebody to move into the apartment to know, hey, you know what? My rent's going to be pretty stable over the time I'm here. Other tenants kind of fear every single year, $50 here, $70 there, raises the rent. So it's important that they know they're going to have a very stable rent environment in my units.
Did that sort of what you've set up there help you when it came to the issues of the eviction moratoriums and people having trouble paying during the pandemic?
That's a great question. So I got lucky because in the Midwest states that I have my properties, where I have most of my properties, they had a lot of state and local government rental assistance. And my property manager was very aggressive in filling out the forms to get that rental assistance to my tenants who needed that. And so I only, out of 53 tenants, only had one tenant that I couldn't get out because of the moratorium. Everybody else that had an issue were able to get rental assistance or work out a plan. And so I think that helped quite a bit. With the moratorium going away, I do think there's going to be more evictions, unfortunately. But I think that there should be a good way to work around that eventually.
Yeah, it seems like what you mentioned there, it's been hard for some tenants to get access to rental funds. There have been a couple of studies about that the funds have been out there, but landlords and tenants have really kind of struggled with getting access.
Yeah, it's funny because I think that in some cases, my property manager had to fill out the form for the tenant and just had them sign it because they just don't either understand it or didn't want to take the time to get rental assistance. And so I didn't quite understand why it'd be such a big barrier to getting this free money from the government. And so we had to really, in some cases, hold the tenant's hand to get them to fill out the forms to get the rental assistance.
Interesting. So you've got 53 properties. What are you planning to do next? Are you planning to continue to acquire? Are there new markets you're looking at?
So right now I'm being very, very, very selective. I think that I've reached my goal, my passive income goal from the rental property. And so I'm being very selective. I'm trying to stabilize all the properties that are not stabilized yet. I'm even considering culling some of the underperformers, a couple that may not be performing as well as I want to. But my goal is to create generational wealth. And my hope is that my one or more of my daughters will take over the portfolio when I get of age to do that. And they'll take over the portfolio and then they can pass it on to their kids. And so I want this to be the bedrock of wealth that I can help create for my family.
I like that. How are you talking to your children about real estate investing, what you're doing? Do you kind of show them as you go along so that they see that this is an opportunity?
So in between TikTok videos, when I can snap their attention, I try to share with them and talk to them about, hey, listen, we own property here. Here's how many units we have. And so they don't always kind of like that discussion, but I think that the more I say it, it's starting to sink in because one time I quizzed my oldest daughter to say, listen, Kaylin, I'm going to see if you've been paying attention. How many properties do we have? Where is it located? And she answered every one of my questions. And so nice. I think, right now they're still in that teenage phase. And this is something that's not interesting to them now. But I think that the more I talk to them about it and the more they understand, financial independence, building wealth, they're really kind of see that they have a pretty big advantage with the portfolio.
What do you think about financial literacy education in general? I feel like we just don't teach teenagers how to budget, certainly anything about real estate and owning a home. What do you think needs to change?
This is one of my passion projects. I agree. I think that in high school in particular, there should be curriculum in every public high school that teaches kids about financial literacy. They teach them about, foreign languages, teach them about like wood class, shop class, teach them a life skill class. And so I think it should be, I think there are about 27 states today that mandate the curriculum in public high school. It should be all 50 states at some point. And this is going to help build wealth and lift up the entire economy for everybody, for people who know how to budget, how to invest, how to save. If you look at the student debt problem today, I think half of that could be solved by making them more literate on the front end, because the problem is you're trying to bail them out on the back end. And so I'm a big proponent for financial literacy curriculum in public schools and also after schools as well. And I think getting it to that, junior, senior in high school, freshman, sophomore in college is the right time to introduce these topics.
Really interesting that you mentioned student loans. National Association of Realtors just came out with a study about how student loan debt is keeping so many people from home ownership, from investing, from all of that, because they're so burdened down with debt. So I think that's a really important factor for people to think about before they take on that kind of debt.
And if you think about that burden of debt hanging over your head impacts what kind of job you look for. It impacts your budget after college as well. So it has such a big impact. And so on the trajectory of these young kids. And so if you do that at an early age, it's going to set you off into an area that you may not want to be in 10 to 15 years. And so it's important to kind of have them to launch correctly out of college, as opposed to being burdened with all this debt.
Yeah, I absolutely agree. So we're in this sort of bizarre real estate market. Prices are higher than we've ever seen them. Interest rates are still low, but that's going to change. What are you seeing, and what do you think about housing affordability and its impact on the country as a whole?
And that's a fantastic question. So I think housing affordability is really kind of gotten off the deep end. I think the median price of a home in the U.S. is like $330,000, which is just crazy. It's gone up like 10% or something like that in the last year. I think the one benefit now with COVID and people working from home, people can now live and work wherever they want for the most part. There's still some companies that don't allow you to do that, and some professions that don't allow you to do that. But I think that allows you to open up these other pockets of communities in the Midwest, in the Southeast, that are more affordable. So my sense is a lot of these very high cost locations like New York, Los Angeles, San Francisco, you're going to see a net migration out of those counties, out of those cities, into more affordable areas. And so that's going to create better jobs. It's going to be more spread across the economy. So I think that although the affordability has gotten worse, I think the one good thing that we're seeing now is the ability to not have to work in these high cost areas. You can kind of work wherever you want, but it's gotten out of control.
Yeah, absolutely. It's been fascinating to watch the impact of remote work. So you've been investing for a long time. It sounds like you started relatively young, but what do you wish you knew before you started investing in real estate?
I would say two things. Number one, I wish I would have focused on cash flow out of the gate. Appreciation can be good, and it could be a good chunk of returns, but it's speculation, right? And so I think that for me, I'd focus on cash flow and have appreciation be the icing on the cake. I probably would have done that out of the gate first. And number two is I would have treated it like a business from the very beginning. I kind of treated it as a side hobby or a side hustle, and didn't really invest in kind of the infrastructure I needed to really kind of make it easier on me when I had more properties. And so I would have treated it like a business initially. I would have thought about the tenant as a customer initially. I would have built up better systems initially, as opposed to having to do it, so late in the game. And so those two things I would do over again if I had to start today.
One of the things I've noticed is that when people are getting into real estate, they kind of don't necessarily understand cash flow. They think of it just as the rent coming in, and they don't factor in all of the other things. How do you think about maintenance, long-term issues? How do you plan for that so that your cash flow covers all of the things that can happen in real estate that can be really random sometimes?
Yeah, that's a great question. So for me, I'm very conservative when it comes to my projections. And so I always take the median kind of rent. So I get an estimate from my property manager, and I take the low end of that range for the estimated rent. And then I always take a 12%, which is very high, vacancy factor. That's about 6 weeks a year, vacancy factor. When it comes to capital reserves, I reserve about $2,000 every year for a single family house. I also estimate about $2,000 in repairs and maintenance every year. And then the rest of the stuff is pretty straightforward. So the property taxes, the insurance, the property management fee. I don't pay for utilities in a single family home. And that's my projection. So the three biggest assumptions for me that are kind of different is going to be the vacancy factor, capital reserves, and repairs and maintenance. And so for me, I'm on the more conservative side. And my goal is to get a 15% cash on cash return at the end of all that. If I can find properties like that, then I want to invest in that all day. If it doesn't quite meet that bar, I'll pass on the investment.
Do you mentor other real estate investors? Do you help people sort of understand the steps they need to take in order to buy their first property?
I try to. So I have a group that I mentor, informally, where we talk about budgeting, saving, 401k investing, real estate. I'm part of a couple of groups as well, like online groups where we talk about real estate, different ideas. I mean, I love talking about it and I love encouraging other people to do it. I think the thing that I see the most is what we talked about before is analysis paralysis. There's some folks I've talked to for the past 5 years that are still reading up on real estate and they've missed a big boom. And so I really try to encourage people to just take action. And you're not going to know everything at first, but just take action is the most important thing you can do is take action and then learn from there. But I do enjoy mentoring other folks when it comes to real estate investing.
So you mentioned before, you're probably not going to be in major acquisition mode for a while. Are you planning that you're going to hold the properties in retirement and then pass them on to your daughters? Is that sort of your plan?
That is absolutely the plan. I want to be able to pass this on as generational wealth to my daughters and to their kids and to their kids as well. I think it's a good foundational part of our estate plan to do that. And I think that my hope is at least one of my three daughters will have an interest in taking over the management of the properties. If not, maybe their son-in-law, I don't know. But my hope is that they'll eventually become part of the family business.
So as you buy properties, are you also selling and are you using 1031 exchanges as part of that?
Yeah, I've done 4 1031s, and I think that's an amazing tool. And so for those who don't understand, there's a tax code called a 1031 exchange, which basically you can sell a property and the proceeds, if you put it into a like kind rental property, will be tax-free. And so it's not tax-free for life. If you eventually sell that second property, you'll have to pay taxes. But for the most part, for that initial sale, it's going to be tax-free. And I've done that 4 times. The downside is that there's certain kind of limits on time and how you can do that. You have to identify certain properties within a certain amount of time, and you have to sell it within a certain amount of time as well. And so if you can find a deal within that time frame, it's a great tool to use. And so I was lucky enough to do it 4 times on my properties, and did not pay taxes on that on the sale.
Excellent. Yeah, it's a great strategy. What are you thinking about some of the moves of the government to try to make housing more affordable, subsidizing the building of homes, things like that?
That's always a tough one because you have to pay for it somehow, right? And so you have to try and help and broaden that safety net, but you can't burden one part of of society to pay for that as well. And so you have to find a way to have a balanced investment and a balanced cost for some of these initiatives. And so if we can find a way to have everyone share in the investment, and if we have folks share in the benefit, I think that's going to be great. But I do think that there needs to be something to be done because, especially where I live in the Bay Area, where prices are very high, it's so unaffordable. And there are people that are commuting 2 hours each way to work because they can't find an affordable home close to where they want to work. And so that's gotten to be tough. And so I think that there should be ways to think about ways to subsidize that housing.
Yeah, definitely. Certainly in the Bay Area, it's been an interesting market to watch. So you don't invest in the Bay Area. Is that right?
I don't, but I wanted to. So even back in 2003, I looked at Sacramento. I looked at Modesto. I looked at Fresno. I looked at even Southern California, but I could not find properties that had the things that I wanted. So I had to go out of state. And so if you're living in a low-cost area, you have an advantage. You can invest in your own backyard. So take advantage of that. And so I wanted to invest in California. I really did, but I just could not find properties that fit my criteria.
Have you considered investing in other types of property, commercial real estate, or are you just focused on single family rentals?
So one thing that's caught my eye is real estate syndications. This is where you have a group of people invest in one real estate project that's driven by a sponsor, and you share in the spoils of that project. It could be a commercial building, it could be a land deal, it could be an industrial warehouse. And there's a lot of platforms that are emerging to provide access to these syndicated deals. And the benefit is, although the returns are not as good as direct real estate investing, it's much less time consuming. And you have a experienced sponsor who's done this before, and you pay them a modest fee, and the returns are close enough to where it may make sense. And so I started to invest in a couple of syndications as an experiment to see how it goes. And so far, so good. So that could be one of the ways I can still get exposure to real estate without direct ownership.
Interesting. Yeah, we cover real estate crowdfunding at Millionacres, and I've talked to some syndicators as well. It's you definitely have to do your due diligence, but it is an opportunity.
And that's important for me. I always focus on the most experienced sponsors with a track record. And the key question you have to get from them is, let's compare on your other projects, your projections to the actuals to see exactly how accurate you guys have been in the past. And so for me, that's helped me to vet through a lot of the sponsors.
Excellent. Do you also invest in real estate investment trusts or in the stock market at all?
I don't invest in REITs, but I do invest in the stock market. That was my initial foray into investing. So when I was 16 years old, my first stock was Nike because I play
Nice.
sports. I love Nike. And so somebody said you should invest in what you know. And so I bought some Nike. And so I still invest in the stock market today, although today I'm less about picking individual stocks. I buy more index and just figure out asset allocation. But I try to turn my daughters into it. And so my daughters each have Vanguard accounts. And so they invest in the S&P 500. And I told my oldest daughter, she took her allowance and her job money. She bought like an iPhone, an Apple Watch, and she bought a Mac computer. I said, Kaylin, if you would have invested that money in Apple stock and waited a couple of years, you could have bought like 10 iPhones. And so you should always take some money, invest in the product, but take the rest and invest in the stock. And that's where you can make money.
I love that. My father did something similar with me, but he told me not to invest in Disney, which turned out to be a bad idea because I could have done much better. But anyway, well, thank you so much for this. Where can our investors learn more about Wealth Noir and your path in real estate investing?
Sure. So you can find Wealth Noir everywhere. So you can look at wealthnoir.com. You can find us on LinkedIn. You can find us on Facebook, on Instagram.
Fantastic. Thank you so much for your time.
Thank you very much.